If AMC is dying, then why are they quietly expanding across the country? Why is bullish volume being buried in places you'll never see? And why, despite growing retail interest, is the price struggling to move? Today, we're breaking down the real reason AMC hasn't taken off yet. It's not because of bad fundamentals. It's because of something much deeper, hidden in plain sight. Let's uncover the truth behind the dark pool manipulation, suppressed momentum, and the quiet war happening behind AMC's price. Hey! Welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But everyone remember, this is not a financial advice video. Let's start with something many investors overlook. AMC is expanding aggressively. According to a recent report, AMC Entertainment plans to open 40 new Dolby Cinema auditoriums across the U.S. by 2027. Now, if you've been paying attention, you've likely seen the constant flood of negative headlines claiming AMC isn't recovering, that it's on a downward spiral. But these headlines often fail to reflect the full picture. Take this cinema expansion, for instance. It's not just about adding more screens. It's about increasing potential revenue, drawing in more customers, and showcasing their long-term commitment to growth. And it's not just about expansion. AMC is working hard behind the scenes to get its financial house in order. They've restructured debt, lowered high-interest obligations, and redirected more funds toward long-term health. That directly translates into stronger fundamentals, something you wouldn't know if you only looked at the bearish media narrative. But here's where things take a darker turn. If AMC is fundamentally improving, why isn't the stock price reflecting it? That's where the dark pool data comes in, a critical piece of this puzzle that most retail traders miss. Let's unpack it. A tweet from User of Intellect recently pointed out that on July 1st, AMC saw about 12 million in dark pool volume. The result? A noticeable upward movement in price. Then more recently, dark pool volume surged to 21 million, and again the price moved up. There's a clear correlation. When AMC's dark pool activity increases, the price follows. But that's not the whole story. Dark pools are often used by large institutions to buy or sell stocks away from public exchanges. On the surface, they provide privacy for massive trades, but for AMC, they've become a tool for distortion. Every time AMC's price attempts to rally, a surge of dark pool volume kicks in, not to support the rally, but to hide it. Here's why it matters. The trades hitting the lit market, the open exchange, are mostly bearish. Those are the ones visible to retail investors. But the bullish activity, the retail buying pressure, the institutional interest, is often buried in dark pools, hidden from the lit exchange where price discovery happens. The result? The stock looks weaker than it actually is. And when retail investors see only bearish volume, they're misled into thinking momentum is fading, when in reality it's just being concealed. Even on days when AMC jumps 11% or more, like recently, the move is likely muted. Based on volume data, AMC should be climbing much higher. But because most of the bullish momentum is funneled through dark pools, the price is artificially capped. That's not just a theory, it's in the numbers. And this leads us to the bigger issue. Price suppression isn't just happening via dark pools. Another tactic being used is the manipulation of FTDs, failures to deliver. According to @crystalball, these FTDs are being kicked down the road into what's called the obligation warehouse, a sort of regulatory loophole that prevents them from ever being properly settled. That's not just unethical, it's a deliberate tactic to avoid covering short positions. If the loophole were closed and FTDs forced to be addressed, AMC's price could surge overnight. And it's not just AMC. We're seeing the same playbook used on GME. On June 12th, GME hit 1.53 million FTDs, a record high. And despite GME owning 4,700 Bitcoin and being well-positioned in the mining sector, its stock price continues to lag behind competitors like MicroStrategy and Marathon. Even though Bitcoin has hit new all-time highs, GME remains in the red. That's not a coincidence, it's manipulation. Think about that. Companies with less favorable fundamentals are outperforming, while AMC and GME, despite strategic moves and industry positioning, are stuck in the mud. And the only explanation is that institutional short sellers are terrified of a price breakout. They've overleveraged themselves, and they're doing everything they can to hold back the floodgates. This fear is confirmed by data from @Wiz, who highlighted that hedge funds have now set a new record for shorting stocks, with S&P 500 short interest rising to the highest level since the 2020 crash. These funds are maxed out on their short positions, heavily overleveraged, and playing a dangerous game. AMC and GME are central pieces in this strategy, and when it collapses, the fallout could be massive. Technically, AMC is showing bullish patterns too. According to @ProfitOfYah, we're seeing a squeeze setup emerging. Price action is pushing toward breakout levels. And while technical analysis on AMC can be tricky due to manipulation, it still offers insight into investor sentiment. We know there are massive short positions around the $3 to $7 range. Every dollar AMC climbs costs the shorts significantly. This creates a perfect setup for a short squeeze if retail is allowed to act without interference. But interference is exactly what's happening. Every time volume builds, every time price starts climbing, the pressure is absorbed by dark pools or buried under unclosed FTDs. It's a coordinated effort to prevent AMC from reaching its true market value. Here's the truth. AMC's fundamentals are improving. The retail crowd is still buying. Short sellers are trapped. The data is on our side. But the mechanisms in place, dark pools, FTD abuse, and manipulation of exchange volume, are holding the stock down artificially. This isn't speculation. This is backed by trade volume, tweet receipts, and institutional behavior. And the suppression can't last forever. As regulations evolve and loopholes close, the pressure will become unsustainable. When it breaks, the upside potential is unlike anything the market has seen before. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.